Good morning, everyone. Good morning, good evening, depends where you are. Let's see, it all works good here. Yep, seems good to me. So, once again, good morning. My name is Vladimir Ribakov from Home Trader Club. Very honored to be here, and I would like to thank Eightcap for the opportunity. Today I have very exciting instruments I would like to share with you with my analysis. And I believe some of these instruments, if not all, could be big movers on the coming days, weeks, depends how the market gains its pace. Few words about myself to all those of you who watch us live and all those of you who will watch the recording of this analysis. As I said before, my name is Vladimir Ribakov. This year I'll be 40. Yay! Getting older here. I'm a full-time trader and mentor for over than 15 years now. In my past, I worked for brokers, houses. I was a private capital hedge fund trader or nostro trader. Some of traders know it as nostro trading. At some point, I decided that I'll go and take the risks and do everything I can to become a full-time trader myself. And looking backwards, I'm fortunate enough to make it happen. And over the last decade, basically since 2011 to be precise, I started in building up my trading community, trading club, with my trading strategies and everything. All my knowledge is there. I'm also an internationally certified financial technician. So that's it. That's pretty much about myself. And I'm the owner of Home Trader Club. This is the place where I share in real time my trading education, my trading opportunities, the way I spot them, mainly why. That's the focus here, the education and explanation of all the reasons behind. Okay. My trading style is a multi-time frame synchronization on key levels. I love to define key levels, if it's supply, demand, and anything in this area, and of course trend lines and all the other important things that we have in our arsenal as technical analysts and traders. Then I love to go to lower time frames to find my trading opportunities, and that's pretty much what I'll be presenting today. Feel free to ask any questions if you have any. Of course, I'm here. I'll be looking on the second screen here to check the chat if there are any questions. Let's see. Yep. Okay, it's already here. In today's list, I have the Aussie CAD, Pound Aussie, CAD Yen, Euro CAD, and DAX. We'll hope to be able to finish all of them. If not, here's what we'll have the opportunity to meet during these months. We have our Mondays and we have our Wednesdays. I'll be here with you. And once again, thanks for Eightcap for the opportunity and inviting me to be your guest, technical analyst and presenter here for these months. So we will go over them. We will follow these opportunities. And of course, if there are new instruments and new opportunities on the way building up for us, we will cover them as well. If you have any questions in between the sessions we have together, feel free to reach me out. As I said before, I am in hometraderclub.com. Let's begin. So I always love to start with the economical events to pay attention for this week. And this week is the first week of a new month, meaning it's a non-farm payroll week. Okay, first Friday of each month, the U.S. Publishing their probably the most important job report around the world, the non-farm payrolls. Besides that, though, there are several events I think we need to pay attention to because they could also affect the instruments that we will be covering today, like the Pound Aussie, the Aussie CAD, etc. So Starting from today, we have, I filtered here with a high impact events only. You can find that all of them in the Eightcap beautiful members area that you have here, economic calendar. I think personally, it's one of the most impressive ones I found. I used to follow different websites until I discovered this one. So well done and thumbs up to Eightcap for making it happen. I think it's absolutely amazing. So we have the manufacturing PMI today, and then starting from tomorrow, Tuesday, it's the cash rate, interest rate in Australia. If you click here, you also can see it, right? Of course, the statement to follow, and also in New Zealand, they both are expected to hike the rates. In Australia, it's, to be honest, split views between the analysts. Some are forecasting it not to change. Some are forecasting it is to change by 25 points. And the way it looks like, there is a consensus in New Zealand for 25 points hike, as you can see right here. Okay? On Australia, you can see a previous and a forecast. Okay, in that case, they are not. I was checking other sources from the big banks, and some, again, it's the consensus there is not clear. It's very split view there. Some are expecting a hike of 25 points or 15 points, basic points. Some expecting it to hold. Will be very interesting to check and see. And also, not just the rate, but the statement, because sometimes in the statement, there are better hints on what's to come rather than just the interest decision itself. Think about it this way. The interest decision is what? It's a fact. It's a given fact. The market is always traded in anticipation for an event. And because of that, we can say that once the news are published, unless the numbers really are different from the forecast, then the market already anticipated that, and the moves is included in what we saw. But the statement, it's about what's yet to come on the next month, on the next quarter, on the next half year or a year. And sometimes that has more impact than the news themselves. Okay, so that's what to follow on Tuesday. On Wednesday, we have the ADP. This is prior the non-farm payrolls and the ISM services, also in the US, trade balance in Australia. And then Friday is the main event, the non-farm payrolls in the US. While in between, in Canada, we have the unemployment rate coming as well. So now, enough with the news. Let's see what are the opportunities for this week. I would like to start with the Australian Canadian. As I said, my analysis and my trading style is multi-time frame synchronization. So I'll be presenting multi-time frames, and I will explain exactly step by step how I come to my conclusions, why, and how do I build my trading plan. Let's start with the weekly chart. Okay, so here is what happened on the weekly chart. We, after a long bearish move, let me just show it to you. After a long bearish move we've had since the old days of 2012, you can see several lows and highs. Let me just mark it differently. Several lower highs, lower lows on the way. The market managed to create a bottom when the pandemic hit us all in March 2020. Then you can see the trend flipping. What do I mean by flipping? We can start to see that instead of the structure that we saw before of lower highs, lower lows, we finally break this sequence, right? And boom. From lower lows and lower highs, we finally get the higher highs. Now, the interesting part here is that as soon as this high is broken, this low becomes a valid, strong demand area. And now, this is based on the lows and highs. Now, take a look on the candles. What happens here, you can see, let me zoom in a little bit, you will see that better. What happens here, okay, since the buyers, look at that, the sellers are in control, look at this spike, boom, buyers flip it. Then they resist here. The sellers are trying to push down, the buyers resist this area. And here, look, take a look at the next following 2 weekly candles. The buyers are pushing up and the sellers rejecting by these spikes. That's representing what? The buyers were trying to make a high, the sellers are pushing it down. That's a pretty absolute view of how they fight each other during this week. But then look what follows on the big candle next to it. Boom, the buyers take the control. This is in most cases in technical analysis, this is a very serious sale, and that becomes a zone of buyers. This is where they took the final control. Couple of weeks they were fighting on a zone, and then boom. So this becomes a demand area. Usually when such zones are retested, the buyers will reject the area where they started to take the control. And here is what we got. Okay, this is the zone. Now, as soon as the price reached the area, look what we have here. Okay, sequence of lower highs, lower lows, and then the bounce from the demand zone. Look how many candles in a row created the higher highs, higher lows on a weekly chart. It's a significant thing. Okay? And what happened since is that the market breaks above, comes for a retest, and right now we are on a retest zone. Okay, so this is the weekly chart. Now, besides that, this high is broken. We did manage to see the market making higher highs, and that means that the lows prior the high, which in our case is this, become a zone of demand. Now, you remember what I mentioned a minute ago about the wicks. Take a look what happens here on this candle. Okay, buyers are trying to take the control. Boom, sellers reject, big spike. And the next candle, again, bullish control. So that again becomes what? A strong zone of buyers. And as soon as the price comes in play, we can anticipate the buyers to fight back. And that's what we happen to see here. Going down to the daily chart, and here is what we see on a daily chart. Okay, analyzing sequence of highs and lows. In a first push up in the uptrend, the low becomes as zone of support. By the time that the market is reaching this area, look what is building up here. This condition is called a bullish divergence. Okay, false break and bullish divergence. So we get the move down, we have the new low, and the price bouncing back out of psychological level 090. Round number, psychological zone, supportive area, demand zone. What else do we need to understand? Here, that the buyers will try to reject. And this is exactly the assumption I want to take to my trading. Okay, I want to see the buyers reject, and then I want on a lower time frame to try and to time my opportunity, which I'll be showing in a minute. Okay, so this is a bullish divergence, as I mentioned. We got the market making lower lows, and take a look on the MACD, moving average convergence divergence indicator. While the market is making the lower lows, the indicator, the moving average of the MACD are making higher lows. It's a condition of a bullish divergence or positive divergence. Besides the moving averages, we also see that on the histogram, flipping from negative to negative zone. Okay, again, higher lows. And the RSI indicator line up. Full synchronization. The daily chart starts to build up here a bullish engulfing. We don't know how the day will end, but so far it looks promising. And this is where I love to drop to the lower time frame and look for my opportunities. So again, the same logic of the sequences. Okay, we got the lower highs, lower lows. If we manage to break it and get the higher highs, I want to see the pullbacks towards the zone where the buyers managed to take the control. The same logic as presented on the weekly chart. And then we'll be looking for this rejection, price to start climbing again, right? The buyers to show their control. Keep in mind, when the buyers are in control, they manage to do what? Push the price higher. When the buyers push the price higher, what happens? The candles starts to create higher highs and higher lows. This is a sign for us, for those who rely on technical analysis, okay? Without institutional tools of official money flow, this is what we have as retail traders, the simple understanding where the buyers take control, how it looks like, and where the sellers take control. And that's why I want to present it to you in a multi-time frame synchronization. Okay, so that's what I want to see here. Higher highs, pull back, hold the level of the demand where the buyers take control from, okay, and it becomes a good sign and a good zone to try and push it up. So for me, AUDCAD is one of the first instruments I will be looking to buy here, aiming the proven zones where the sellers showed their signs before, which means where did they take control from? This is the first zone. The next zone is here. Again, look what happens here in terms of sellers. Higher highs, higher lows. Buyers are pushing it up, sellers taking control. Zone of sellers, right? The switch here happens, and then again, sellers reject. You can see all these spikes, right? The spikes represent what in that case? Upper spike of the candle represent who? The sellers. The buyers were trying to make highs, sellers take control, boom, sellers in the game. Together with the official swing highs, this is usually where the levels tend to be respected and a good zones to consider to take profits. So this is my plan for the AUDCAD. If you have any questions, guys, don't hesitate to put it down, and I'll do my best to answer as detailed as I can. Sorry? Oops. Not sure what happened here. Seems I clicked something. Yeah, okay, it's gone. Yeah, I could hear myself. All right, so this is the AUDCAD. Again, if you guys have any questions, feel free to ask. Meanwhile, I'll be moving forward to the next opportunity. That will be the pound Aussie. And as I do that, I also want to remind you that we have some very important news coming this week in Australia. That happens tomorrow. We are talking about the interest rates. Okay, that could affect pretty much everything. The way that the market currently responds at the beginning of the week gives me the understanding that there is a good, healthy chance that market anticipates the Australian bank or to go for a hike, or at least to mention on its statement something very hawkish, something very some hint that tells us we are here, we are not done yet with interest rates hikes or anything like that. This is the feeling they currently give us based on the current price action. So what do we have on the pound Aussie? Very interesting opportunity from my point of view, going up to the weekly chart where I usually start my analysis. Here is what triggered my interest on this pair. The first of all, psychological level of 185. What we can see here is the price coming in and sellers reject this area. The next part I like in this scenario is that we got two waves upside, but the second wave is currently smaller than the first wave, and it has a possible bearish divergence this time on the histogram of the MACD. You can see high here, low for a positive, and lower high than the previous one. Okay? So higher highs on the chart versus lower highs on the MACD histogram create for us a negative or a bearish divergence. Okay? All that happens to be around important resistance zone as well. The area of the sellers, the broken support that becomes a resistance, and look what happens here. See these two big bearish candles. This is where the sellers took the control out of. See here, consolidation. No buyers, no sellers. Small candles, most of the candles are small, and big wicks. No decisive direction. Then the sellers took the control. Okay? This becomes again the zone of the sellers, the area of supply. And as soon as we come back there on a rally, there is a good possibility that they will reject the zone, they will hold the zone, and will try to fight back. And what happens here on the weekly chart, we can start to see lower highs, lower lows, which represent, again, potential sellers' control. Taking it down to the daily chart, we got here 3 reducing waves, as you can see, sequence of higher highs, higher lows, and each of the waves is getting smaller than the one before, and it's called also a rounding top. As you can see, the momentum is decreasing, the angle of the movement rounds, okay? Slows down also on the histogram of the MACD, as well as the RSI joins the party right now. So the way I see that, very possible scenario is that we are due to some corrective movement here, or very likely to go and retest the zone where the previous buyers took control, which is in our case this low and the spikes, okay, which is also here, and potentially to one lower zone, which is right here. Okay, these are the areas I am after. So if we mark them here, okay, 1 and 2. Okay, so let's go here. Going down to the lower time frame 4-hour chart, this is where it starts to be interesting for me to start looking for the trading opportunities. Let me zoom out a little bit. So the most recent uptrend on the rally, on the go, we have one here starting from the very first one. This could be our target zone also. And we have the most recent one, which is here in this flow. Okay, sequence of higher highs, higher lows, been broken. Absolutely classical scenario here that give us the understanding the sellers are very likely, again, trying to take the control. Now take a look what happens besides that. Fake highs, I love to call it a false breakout. Okay, attempt to make a high, pull back. Buyers are not in control at this moment, right? Another attempt to make a high, boom, pull back. Again, buyers are not in control in that situation. And now, besides the trend line, we also flip making the lower lows. Okay, so fake highs or false breakouts on the key level. Remember the 185 zone that we discussed before, right? Flips, fake highs, buyers shows that they are running out of their grip, out of the steams, and the sellers take control, breaking the trend line, making lower lows. So as long as that holds, for me, any pullback is the opportunity to look for the further bearish continuation. Broken support becomes a resistance, and the previous highs become areas of supply where the sellers had our control. And this, any pullback, even on the lower time frames, towards or close to these areas, usually provides here a good trading opportunity to look for the next key levels, which we marked from the daily chart. Okay, so these are the two main instruments I am looking to work with at the beginning of the week. Keep in mind, we have news tomorrow. It could accelerate the party, or it could change the scenario, right? The technical analysis is always anticipation of what the market, the traders, the investors are anticipating from the news, from the official numbers behind the scenes. It's always like that, okay? What the chart represents is the anticipation of the market. The official news, hints, statements, some words in the press conferences could change that. And then we have to adjust if needed. News can boost the anticipation or change the anticipation. And then the analysis could change accordingly. So keep in mind of the news and the levels, and look for the trading opportunities there. As I mentioned at the beginning of the video, I have more instruments for this period we have together for this week and for this month. That would be also the CAD Yen and the AUDCAD and DAX, also instruments that I'm following and could deliver big. So on the next session together, which would be the Wednesday, we will follow up on these two quickly and of course move forward for more opportunities. Again, as you can see, my working style, I start from higher time frame, going with occasions where I can find synchronization. The reason for the synchronization for me is because each time frame represents different flow of money. Okay, weekly represents long flow, long-term flow of money. Daily chart represents a bit shorter. It's different trends, right? Much more money is flowing on a weekly chart than a daily, and much more money flowing on a daily chart than on a 4-hour. I love the synchronization because different money flows when they all are synchronized and showing or leading to the same conclusions, the probabilities in trading tends to be higher. Okay, as traders, we have no warranty, no guarantee, no 100% success rate, accuracy rate, or chances. It does not exist. As traders, it's a business of numbers, statistics, and probabilities. And if we start our trading opportunities on higher probability, we already have an amazing edge over many other traders who just usually do what? Rush in a trade from wrong levels. And timing is everything, not just in life, not just in trading, pretty much everything we have and do. It's very important to be there in the right time, in the right place, from the right with the right opportunity. So again, thanks to Eightcap for inviting me and being here, your guest speaker, technical analyst, presenter for this month. I'm excited for the opportunity and to share with you my trading opportunities, and mainly to explain why, for me, these opportunities are as good as they look, at least for now. We will see how the market develops, of course, but with the levels, the probabilities are there, I'm there. As simple as that. If for any questions, you can always ask here. You can always write in the YouTube video comments for those of you who watch the recording. You can reach me out directly in Home Trader Club. And that's it for today. I would like to thank everyone who watches the video, who will watch the recording, and of course to Eightcap once again for the opportunity and for making such a great events for their traders. So thank you and all the best.